Welcome to Economic Quotient, and before we jump in, make sure you subscribe, like this video, and share it with your friends, because we keep finance and geopolitics simple, fun, and actually useful. Today, we're diving into the wild world of geopolitics and your money, with a sprinkle of humor. Imagine the global stage as a dramatic soap opera. The US is side-eyeing Venezuela, Iran is back in the headlines, China is flexing around the world, Russia is still stuck in the Ukraine story, and Trump is out here saying things that make markets spill their coffee. The big truth is this: when leaders start talking loud, markets start moving fast. That's why conflicts don't just stay on the news. They hit crypto like Bitcoin and Ethereum, stocks like the S&P 500, and commodities like oil and gold. We've already seen the pattern before. Russia-Ukraine in 2022 pushed oil above $100, wheat surged, inflation went crazy, and markets dumped risk before bouncing back. People ran towards safe assets like the US dollar, US treasuries, and gold, the classic panic blanket. Even Bitcoin, which people call digital gold, didn't always act like it. In real panic moments, crypto often trades like a risky tech stock, exciting when everything is calm, terrifying when the world gets spicy. So the message is simple: global drama equals market mood swings, and your money feels it. Now let's update the Iran situation, because this is where the latest episode is heating up fast. In recent days, we've seen rising US-Iran tension, and the signals are getting serious. Reports say the U.S. began evacuating personnel from the Al Udeid Air Base in Qatar, which hosts around 10,000 troops, as a precaution while Trump publicly warned Iran and hinted at very strong action depending on what happens next. At the same time, shipping activity around Iran started acting nervous. And ships don't get nervous unless money is at risk. Reuters reported that the number of tankers inside Iran's exclusive economic zone jumped from 1 to 36 in only a few days, with multiple ships anchoring outside port limits as a safety move. And there were signs of increased GPS interference around the Gulf and near the Strait of Hormuz. And then came Trump's big economic threat. On January 12th, 2026, he said any country doing business with Iran could face a 25% tariff on all trade with the United States. That's huge because it doesn't only squeeze Iran, it pressures other countries too, and that can bring back trade war vibes at the worst possible time. So what happens to oil, gold, stocks, and crypto when Iran risk rises? Oil usually reacts first because the Middle East controls a lot of energy flow, and the fear is always about disruptions, especially around the Strait of Hormuz. This week, Reuters noted oil prices jumped about 9% in a week as traders priced in a messy mix of Iran tension and broader global disruptions. Even if supply isn't cut yet, fear alone can push oil higher, and higher oil can bring inflation back like an annoying ex who suddenly messages you again. When oil jumps, gold often follows because people want safety. Gold doesn't need growth or earnings, it just needs people to feel nervous. Stocks usually don't love this because its expensive energy means higher costs for businesses and lower profits, and investors hate uncertainty more than they hate doing taxes. Crypto is the wild card. Bitcoin can sometimes pump on anti-system vibes, but in big fear moments, it can also drop with stocks because people sell risky assets and run to cash. Think of Bitcoin as the high-energy friend. When things go good, it goes very good, and when things go bad, it trips over its own shoelaces. Now bring it home. What should everyday investors take from all this without turning into full-time doom-scrolling detectives? Here's the cheat code. Markets move on what's happening and what people think might happen next. With Iran, the key danger signs are talk of strikes, pressure on shipping lanes, and economic moves like tariffs or sanctions that drag other countries into the mess. We're already seeing warning signals through base evacuations, shipping caution, and oil jumping. If tensions cool down, oil can drop quickly, stocks can recover, and crypto might bounce hard because traders love relief rallies. If things escalate, especially if shipping gets disrupted or trade wars expand, then expect oil to spike, gold to shine, stocks to wobble, and crypto to either act like a chaos hedge or crash with everything, depending on how deep the panic goes. So stay informed, don't get trapped by emotion, and remember, the best investors don't predict the future perfectly. They build portfolios that can survive surprises. Thanks for watching. Don't forget to like, share, and subscribe. And I'll see you in the next one on Economic Quotient.